welcome to Prime Property, your weekly real estate reckoner. I'm Tara Rai, and this is what we have on the show today. A body blow for DLF and its promoters. The market regulator banning DLF from accessing the capital markets for 3 years puts a question mark over its plans of reducing debt and puts at risk the timely execution of existing projects. Will the long list of DLF's legal tussles distract it from its core business? Festive cheer for 30,000 home buyers in Noida in the form of a draft notification from the Environment Ministry. The draft gives a green signal to new and old projects around the Okla Bird Sanctuary that had earlier been banned by a tribunal. The Karnataka state government is moving to reclaim government land worth over 1 lakh crore rupees, land that has been allegedly taken over by encroachers. We go hunting in Mumbai with a budget of 1 crore rupees for hot deals this festive season. Real estate giant DLF is on the receiving end of a body blow from the market regulator. SEBI has banned DLF, 3 of his promoter family members, 1 board member and 2 former employees from accessing the capital markets for 3 years. This is for not making proper disclosures during its IPO in 2007. For the week, the DLF stock crashed almost 28%, losing over 7,000 crore rupees in market capitalization. At 9,200 crore rupees, it was the country's largest IPO, and it's DLF's 2007 public offer that had pushed it out of the frying pan into the fire. Market regulator SEBI has held that the company did not make proper disclosures when it went to market and banned the company and a number of executives, both present and former, from accessing the capital markets for 3 years. The company has appealed at the Securities Appellate Tribunal, and its hearing is scheduled for 22nd of October. Those banned by SEBI include DLF Chairman KP Singh, his son and DLF Vice Chairman Rajiv Singh, and KP Singh's daughter Priya Singh. The company's Managing Director TC Goyal, Ramesh Zanka, who was CFO at the time of the IPO and now works with real estate firm IREO, has also been banned. Kameshwar Swaroop, who was DLF's legal head at the time of the IPO and has since retired, has also been banned. SEBI's order follows a probe undertaken after a businessman, Kimsuk Krishna Sinha, complained he had been duped of 34 crore rupees by Sudipti Estates, a sister concern of DLF. In the FIR, Sinha has claimed Sudipti and its directors had lured and compelled him to transfer certain plots of land and then failed to fulfill their promise to develop those plots to provide higher returns. Now, while DLF has been maintaining that Sudipti is a separate legal entity owned and controlled by different individuals, Sinha insisted that DLF Home Developers Limited and DLF Estate Developers Limited were sister concerns and thus inextricably linked and part of DLF. DLF, in its first IPO prospectus dated May 2006, had referred to Sudipti as an associate company. But this prospectus was withdrawn following a tussle with minority shareholders, and the new prospectus filed in January 2007 did not mention Sudipti as an associate firm. DLF says that at the time of the second DRHP, the company, through its merchant bankers, filed a document with SEBI indicating all the differences between the first and second DRHP. Thus, the fact that Sudipti had ceased to being a DLF subsidiary between May 2006 and January 2007 was within the knowledge of SEBI. So why didn't SEBI object to the dissociation then? DLF, in written submissions to SEBI, has also argued the deletion of Sudipti from the second DRHP was not through clandestine or surreptitious maneuvers but done in an open and transparent manner, as it had highlighted all the differences to the market regulator between the 2 prospectuses. DLF also argues the inclusion of Sudipti in its 2007 DRHP would not have affected investors' judgment on whether they should invest in the IPO. It says, and I quote, "The relevance of Sudipti to DLF from a commercial viewpoint was merely the developmental rights in the land owned by Sudipti that DLF procured through DLF Commercial Projects Corporation. The prospectus also fairly disclosed the risk relating to the development rights constituting 37.9% of the total land reserves of DLF. This percentage of 37.9% included the sole development rights procured from Sudipti," unquote. The ban will hurt DLF and its promoters hard, especially when it comes to plans of accessing the capital markets to reduce the company's mammoth 20,000 crore rupee debt. There were compulsory convertible preference shares in a DLF subsidiary held by the promoters due for conversion in April 2015. The plan was for DLF to take over this 40% economic interest held by the promoters in the subsidiary DLF Cyber City Developers in lieu of the listed company's shares. This would have pushed the promoter's stake above 75%, which would then have been brought down to the SEBI-mandated levels via a stake sale. The proceeds of that stake sale would have been used to reduce debt. That's not all. The ban also puts plans for the listing of a real estate investment trust in jeopardy. Unless, of course, DLF gets the order stayed or beats the SEBI order. This is one more in a long list of legal troubles for the real estate giant. On August 28th, the Supreme Court instructed DLF to pay the 630 crore rupee penalty imposed on it by the Competition Commission of India in 2011 as a precondition to admit its appeal. A little later that week, on the 3rd of September, the Punjab and Haryana High Court cancelled the 350 acres of prime land in Gurgaon the DLF had won in a state auction in 2010 for 1,750 crore rupees and instructed the state government to re-auction the land within 6 months. This land parcel is important to DLF as it's contiguous with its golf course. It has already moved to the Supreme Court. There are older legal problems too. The competition watchdog is investigating if DLF has abused its dominant position in commercial real estate and for another residential project, New Town Heights in New Gurgaon. Then there's DLF's appeal against the Punjab and Haryana High Court's decision to demolish structures on 20 acres of its technology park, Cyber City in Gurgaon, and return that land to farmers. Already home to nearly 50 MNCs, Cyber City has been conceived as one of India's largest integrated IT parks, spread over 100 acres. And DLF has another appeal in the Supreme Court against demolition of an IT SEZ over 30 acres, again in Gurgaon. This SEZ has been operational since 2006 and houses 30 IT companies. All of this means that the company's focus for the time being will be on solving its legal problems and perhaps not on its core business. There's also festive cheer for 30,000 home buyers in Noida in the form of draft regulations from the Environment Ministry. These home buyers were staring at the prospect of losing their investments as the National Green Tribunal had banned real estate activity within a 10-kilometer radius of the Okhla Bird Sanctuary in New Delhi. Under the draft proposal of the Environment Ministry, an area up to 100 meters from the eastern, western and southern boundary of the Okhla Bird Sanctuary and an area of up to 1.27 kilometers from the northern boundary will be treated as the eco-sensitive zone. This is crucial as it gives the green signal to all upcoming and completed real estate projects in Noida. Public comments have been invited within 60 days of the draft notification. The draft notification is also a significant dilution of the 10-kilometer eco-sensitive radius that had been ordered earlier by the National Green Tribunal with retrospective effect. That order adversely impacted 30,000 home buyers in Noida. That same NGT order had also banned the grant of completion certificates, which are vital for home buyers to begin moving into their properties. JP Infratech's counsel Abhishek Manu Singhvi had informed the Supreme Court in June of this year that nearly 4,000 flats constructed by the company are completed and home buyers who have paid for them are awaiting occupation certificates, in the absence of which buyers would suffer financially. Builders said they had all the requisite approvals and could have never foreseen a retrospective order from the NGT.
Well, after a cursory reading of the draft notification and looking at the plan, the drawing, the map which has been attached with that, we don't think that any projects in Noida get affected as far as the draft notification is concerned. In the Noida, only sector 95 comes under 100 meters, that too a very small part of it. So we don't think that any project is being impacted because of that.
Mr. Modi, the Supreme Court informed the Environment Ministry in June to expedite the matter and come out with a draft notification quite soon. It's taken quite a bit of time. By when are you expecting closure to this entire matter?
One way to look at it could be that it has taken a long time, but at the same time we must understand that the ministries also has to look after all the aspects. It cannot take a hasty decision in favor of only one aspect just because there is a lot of third-party interest. This draft notification has come out on 24th of September, and it calls for 60 days of objection and comments suggestions period. So that should get over on 23rd of November. I do expect and we hope that post that the final notification should not take more than a couple of weeks.
Many of the thousands of home buyers must be having sleepless nights. Have developers been approached by buyers wanting their money back?
No, there were buyers who were part of the projects which were within the 10-kilometer radius obviously have been speaking to their respective developers about the progress on this particular issue or the status on this issue. But I must give the kudos to the buyers that they have been most sensible in the whole matter, and there has been no pressure or hue and cry about any kind of refund of the advances paid by them towards their apartments, because most of them understand that their housing complexes are ready or well in advanced state of construction, and this matter had come up suddenly.
On that note, we're going to slip into a short break. On the other side, we head down south to Karnataka. The state government is moving to reclaim government land worth over 1 lakh crore rupees, land that has been allegedly taken over by encroachers. Stay tuned.